Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me Shailendra Bhatnagar. This is a show where we'll help you understand the closing action on the day street. What a day it has panned out to be. The Nifty has finally recrossed the 20,000 mark as well. Right now also you can see 20,075 reflected on the major index, about 0.9% of a move on the upside. And it's all cylinders firing. You can see the Nifty Bank contributing to 44,408 currently, a jump of 526 odd points, a 1.2% surge as well. When we talk about the sectoral move as well in the markets, you can see the autos and the IT, financial services clearly driving the momentum today. Barring the realty index, that's half odd percent down in the red. Rest of the sectors are all contributing in the sharp momentum that we are witnessing in the markets and history being created. The BSE listed stock markets, the BSE listed stocks have also reclaimed a market cap of $4 trillion. This is for the first time ever, and with this India has now become the 5th country with an equity market cap of $4 trillion. And we are above London now on that figure too. Shail, good afternoon. Thanks a lot for joining in. Pans out to be a great day so far.
Good afternoon, Sakshi, and a very warm welcome to hundreds and thousands of viewers are now joining us. Like I was discussing with you offline, it's a crisis of plenty. Let's start with the IRIDA listing. 32 rupees was the IPO price. It's freezed circuit up at 60 rupees. There is a buying circuit of 1 crore 40 lakh shares and there is no let up in demand. We've had 20,000 back on the Nifty at a 2.5 month high as far as prices are concerned. A fresh record high is in the works, and amongst the indices that are at a record high today, it's the NSE 500. Now this requires a special mention simply because this is the widest index that we have, comprising of 500 shares, and if that is the case, that it's at a record high, it points to broader participation that we are seeing across the board. The Nifty small cap, the Nifty mid cap index is at a record high, the Nifty realty index is at a record high, and we have a 190 point rise on the Nifty at 20,081. It was a gap up today of 74 points, and beyond those 74 points we've added another 100. In the morning we had discussed the Nifty 20,000 December 7th call expiry on December 7th at about 152 rupees. Sakshi, that is at the day's high 235, as also is the Nifty. So fresh highs are coming, record highs are coming. कुर्सी की पेटी बांध लीजिए और तैयार हो जाइए बहुत ही शानदार मोमेंटम के लिए, और वो इसलिए क्योंकि आप जितने भी IPOs को लिस्ट होते हुए देख रहे हैं उनसे 1.5 लाख 2 लाख करोड़ रुपया वापस सिस्टम में आएगा, and that system will absorb by moving towards a fresh record high. US 10-year bond yields have dipped to September 14 levels. That's a 2.5 month low. You have foreigners buying for a 3rd day in a row. That is fresh momentum, and there is no let up in demand. You have IRIDA listing. You have almost a clean chit on Adani Group. You have insurance companies firing. You name it, Sakshi, it's in the green. So that's how the markets are at the moment. Just buy and hold and just enjoy the rally.
Absolutely, Shail. At this point in time, let's also welcome our guests on the show. Devin Choksi now joins in, MD of DR Choksi FinServ is with us. We also have with us Vinay Rajni, Senior Technical and Derivative Analyst, HDFC Securities. Welcome and good afternoon to both of you. What a great day to have you both with us. Good afternoon to you, Devin. Let me kickstart this discussion with you. $4 trillion mark right now here. We are seeing stellar listings come in as far as the IPO space is concerned. The all cylinders fire firing as far as the secondary markets are also concerned. How is the market setup really looking like to you, and where are we headed?
Good afternoon, Sakshi. While we continue to celebrate, I think, newer levels, newer heights, newer values, let's also understand the clarity that between yesterday and today, the fundamentals have remained by and large same. Nothing has changed. What has possibly changed is the realization that some of the global index funds would start putting their money into Indian markets, and that is to the tune of around $3.6 billion. If that kind of money starts coming into the market, which in all likelihood will chase some of the index stocks, that's where you are seeing the effect on the index stocks. And that's where I think probably the index stocks have started rallying now, which was not the case earlier in the yesterday or day before yesterday. The second most important aspect is the Adani stocks, which have not been participating, have started participating into this particular upside. So as a result of which, I think that has also added to the contribution to index. And last but not least, I think most of the investors, traders, had actually, I think, given the down rating to banks and NBFCs. And that's where probably I think you realize that I think the down rating given to banks and NBFCs was probably unwarranted, because I think the banks and NBFCs are likely to do well and continue to do well in going forward periods. So all in all, put together, when you summarize, I think these constituents, you find that I think the market is possibly remaining steady and is rallying, largely also because of the fact that the liquidity is supporting the fundamentals. The fundamentals have remained strong. Liquidity was up till now circumspect, and today I think the liquidity is supporting the fundamentals. So the rally in the market above $4 trillion, for which we all deserve congratulations.
Okay. Vinay, let me...
Devin bhai, good morning.
Yes,
Good morning.
Yeah, Sakshi, continue.
Vinay, let me get your word also, and then I'll, give it up to Shail to continue the discussion. What would you buy afresh as the Nifty has hit the 20,000 mark again? Of course, there have been discussions a lot about the valuations, especially in the mid and the small cap space as well. Talk to us about, where exactly would you be putting in fresh money now in this market?
Yeah, so good afternoon. So as far as fresh trades and short-term bets are concerned, fresh breakouts have been witnessed in the bank nifty, and some of the sectors like IT sector is continuously participating. So I see some opportunities building in private sector banks, and especially stock like ICICI Bank. So basically what has happened is we have seen an inverted head and shoulder pattern breakout on the daily chart of bank nifty, which is a fresh breakout. So in the month of November, bank nifty previously underperformed and now started performing with the market. So there is a clear-cut breakouts on the charts, and we can expect large-cap private sector bank stocks to perform well in the coming sessions. So there is a opportunity in trading side in the private banks, as well as in some IT stocks. So IT stocks are looking extremely strong. So stocks like ICICI Bank can perform, and mid-cap IT stocks like Coforge and Birlasoft can perform. So there are a lot of opportunities in infrastructure sector. We have seen some fresh breakout coming in Larsen and Toubro. So there was a running correction in some stocks in large cap, but now they're resuming their primary uptrend. So stocks like ICICI Bank, Coforge, then Larsen and Toubro, Birlasoft, these stocks are looking extremely good on the charts and can be looked at for the short-term bets.
Right. Good afternoon, Devin bhai, and what a pleasure to welcome you on such a fantastic day. Record highs across the board on Nifty 500, real estate, small cap, mid cap, Nifty above 20,000. I just wanted to understand the psychology of the market at this level. We are headed into an election result 2 days from now, and obviously, the tone and the texture does not probably favor what should be a runaway success for the central ruling party. Do you think that the market is telling us something which we don't? Of course, there are a lot of good developments on the corporate side, on the global side, but does the market know more than what we can guess when it comes to the election result?
Good afternoon, Shail, and let me respond it this way. BJP lost out in Karnataka. What happened to market thereafter? BJP could not get West Bengal. What happened to markets thereafter? BJP did not get Chhattisgarh in earlier times. I think what happened to market thereafter? See, in my viewpoint, I think the market have a business to continue. And frankly, I think the state elections, they come and they go. The state politics is completely different than at the central level. That is what we all understand. Currently, the country is attracting a lot of investment from outsiders, largely because of the policy that the country has implemented. And as a result of which, I think these policies are attracting not only money, but at the same time, it is generating significant amount of surplus out of the money which is getting deployed in form of tax collections, in form of, I think, employment, in form of higher industrial output, and so and so forth. So, in my viewpoint, I think these are some of the more stronger derivatives of implementation of the policies by the central government. And that's what I think the market is happy about. The state election matters, but I don't think that the state election would drive the market up or down because everybody understands one thing very clearly in India as well as abroad that in India, the state elections is everything about the freebies. How much freebie that you distribute, be it in Delhi, be it in Karnataka, or be it in some other states, whatever amount of freebies that you distribute, I think you end up buying the votes. And this is a dangerous politics which is going on. Of course, that's not the subject that we will be discussing, but it's a dangerous politics. The country has to have some kind of a law wherein taxpayer money cannot be distributed freely, the way in which I think the state elections in the state governments are doing. Separate subject, as I said. But the fact is that the market is discounting it and market is moving ahead. So I think we'll have to stay with the fundamentals. We'll have to stay with the growth prospect of economy. We'll have to look at how in 2035 a 4 trillion market cap becomes 12 trillion to 15 trillion market cap. That is what I think we have to look at. How new 500 to 700 billion dollar worth of new papers which will come in the market between 2024 to 2028 in these 4 5 years. How new papers will come into the market is something which the market should be looking at and remain excited about. Elections does matter, but at the same time, markets fundamentals are definitely stronger at this point of time, and it is going to take country to newer levels.
Right. Devan bhai, the other thing I wanted to put across to all the viewers who are watching us, that one of the finest brokerages over the last 7-8 decades has come from the house of Choksi's, and they've always believed in creating super long-term wealth by doing minimal amount of physical work and maximum amount of cerebral work. Devan bhai, at these levels, 20,000 on the Nifty and record highs across the board, what according to you is still relatively cheaper, and what should one buy at these levels for the longer term, the time that you mentioned, 4 trillion to 12 trillion, wider participation from global players? What looks good to you even now?
So we are extremely convinced about the consumption, the discretionary and non-discretionary consumption. Consumptions in the industrial space, in the B2B space, and consumption also in B2C space, where individuals like you and me are consuming the automobiles and related to automobiles entire ecosystem is getting used. We are consuming the fast-moving consumer good items. We are consuming the fast-moving electrical good items. So we are consuming the services like tourism. All in all put together, I think as long as the consumption is continuing to grow, and which it will, I think the growth is going to be superlative. And that is where probably I think one will have to remain convinced about. As far as the opportunity goes within this consumption space, there are plenty of companies. However, I think in the recent times, they have scaled up. And in my understanding, generally understood that pre-election rally would probably, I think, make them a little more expensive. So you will have to actually wait before buying a full hog into them. You might probably see in next 6 months a FOMO effect, wherein some of the investors will chase expensive valuation. But I would rather think that I think having identified good quality stocks, that does not mean that I think you have to buy in every rally. You may probably have to wait for the correction in the price to buy them into the portfolio. So if consumption is one space, we find in IT, particularly engineering R&D, is I think a specialized space where probably likes of L&T, Mindtree, or for that matter, Tata Elxsi, or now Tata Technology, or KPIT, Science Technology, such kind of companies are already having a niche in these areas of business. We find them attractive enough. We find EMS business, electronic manufacturing and services business, I think becoming attractive enough, largely because of the fact that the defense and railways, both of them are also sourcing significantly large amount of components from, I think, some of the EMS players, where probably I think the growth is going to grow faster. Maybe some of the companies are mid-sized companies, small companies. They are likely to grow bigger from here onwards. Some of the specialty generic pharma companies, they look interesting enough. They are basically developing the niche in therapeutical segments in treating the patients. That's where probably we believe that I think the opportunity is going to be right. So yeah, there are various companies. Only point which I want to emphasize once again, that if they become expensive, you don't have to necessarily chase them. You have to wait before buying them. Some of the auto ancillary companies and some of the commercial vehicle companies we like even at this price, though they have become slightly expensive. They may be 10-15% expensive, but I think they are good at this price too for the long-term investment of next 3 to 5 years. So one can buy them into the portfolio.
Okay. Vinay, let me get your views on one or two stocks that are buzzing in trade, and then we'll come back to the conversation with Devensa also. CDSL, why don't you look at the charts of CDSL? It's now closing in on 1900 mark as well, up 4% at 1883 right now. This momentum has been very, very strong over the last 1 month, 37% surge, last 6 months a 91% surge. It's already trading at a multi-year high level, 695% of a move in the last 5 years as well. How would you look at this stock?
So it is in the blue sky territory, and it is at continuously registering a new all-time highs. And the previous top, which was made in the month of December 2021, there was a top of 16,1688. Now that resistance was taken out in this month only, and now that becomes a strong support for the stock. So you can say approximately around 1700 there is a strong support. The stock is into a bullish momentum and has been rising for last 3 consecutive months and into a clear momentum. So it is into a continuation. We can say there is no fresh breakouts on the charts, but yes, it has been an outperformer and it is likely to continue this outperformance in the coming sessions also. So whatever dips are coming, I think that should be utilized as a buying opportunity for in this particular stock. But as far as fresh traders are concerned, fresh trades are concerned, I think this is not the ideal scenario. Risk reward ratio is not looking favorable. So on dips, one can definitely consider as positional setup is quite good. But those who are already holding this particular stock, I think they can continue to hold and keep that stop loss on a trailing basis as far as trading is concerned.
Okay. The next stock, why don't you look at Tata Motors? It's now at a new 52-week high. We've also seen the 700 mark getting crossed today, right ahead of Tata Technologies listing tomorrow. So a fresh momentum being built there. How are you looking at the stock price?
Yeah, so in previous 4 months, we saw that Tata Motors was not getting was not surpassing the level of 660. Now the consolidation which was there in previous 4 months, that has been taken out decisively and it is sustaining above 700 now. So looking extremely strong on the charts from the auto sector. Itself is performing very well. Two-wheeler segment is performing well now from the commercial space, and to four-wheeler space, Tata Motor is one of the stocks which is looking extremely strong. So I'm expecting this trend to remain strong. It's a breakout from last 4 months consolidation, and the previous resistance will now become a support which is around 660. So keeping that stop loss in mind, keeping that support in mind, one can continue to hold on the long position. One should not look for anticipating any top, because right now it is into a full momentum, and this momentum will last at up to what time and to which level, it is very difficult to say. So better to keep this stock on a trailing basis. As of now, the stop loss and short term support for the Tata Motor is seen at 660.
Okay, let's look at stocks that we had marked in the morning and are doing fantastically well so far. The PCR will fire Muthoot Finance. This was a pick that was discussed somewhere like 350, 340, 1350, 1340 in the morning. It was Rahul Sharma's top call. At the moment at 393, it's buzzing with gains, 5.4% higher, and a very, very strong momentum coming in the cash counter, which is now trading above 1409. So this is the kind of move that was caught early morning, and of course it's the 20,000 call on the Nifty for December 7th that was discussed at 153. Now doing fantastically well. The Nifty itself, 20,081, close to a double century, ladies and gentlemen. Like I said, tighten your seatbelts. A fresh record high is on the way. Devin bhai, I'd again like to understand how are you constructing portfolios for your newer clients? What are you advising them where to put in money at current levels? Imagine a person with a 5 lakh rupee check who comes to your office and says कि देवन भाई अभी तक हम लोगों बाजार में पार्टिसिपेट नहीं कर पाए, फीलिंग ऑफ मिसिंग आउट हो रहा है, ये 20,000 आ गया निफ्टी पर, बाकी सब जगह रिकॉर्ड हाई लगा जा रहा है. You know, mid cap nifty is up 11%, Sakshi, in the month of November. 22 sessions, a couple of holidays in middle, and it's up 11%. मतलब आप देखिए क्या डिमांड है बाजार में. So देवन भाई, what would you be doing with that 5 lakhs? Where is that going?
So I think opportunity, as I said, is in consumption and discretionary space, auto and auto ancillary, along with that the finance company. So finance company largely for the funding of the discretionary spending, including for housing finance. We find that I think this is an opportunity, I think for us as of investor that he is coming into for investing into the portfolio. We believe commercial vehicle within the auto space is a long headroom at this point of time. Likes of Tata Motors, likes of Eicher, likes of Ashok Leyland, within the listed space, I think they'll definitely look, I think, more promising than ever before. The infrastructure spending is creating more demand. Logistic management required by the industry is creating more demand. Scrappage policy is creating more demand. Newer roads getting constructed is creating more demand. So all in all put together, the entire commercial vehicle space looks interesting for investment perspective. Along with them, some of the ancillary companies look interesting from the investment perspective. Now, as a proxy to the spending by the consumer, we find that I think retail finance company, housing finance company, auto finance companies, they would probably have relatively better outlook going forward. And we believe that I think it could possibly, the loan book could possibly grow at the rate of around 20% plus on a CAGR basis for next 4 years or 5 years, which means that you are basically seeing doubling the size of the balance sheet in 3.5 to 4 years time for these companies. So where we can possibly invest our clients' money, I think this is one area which we like. I was making a point on engineering R&D business, and that's where I think some of the companies are looking brilliant and very well positioned. So again, I think the names are more important, but at the same time, one must understand that this theme is likely to play out well in next 5 to 10 years because a systematic amount of shift is taking place. The newer generation of vehicles are coming in the transportation sector. Aviation, I think newer aircraft orders are being placed. The new fuel mechanism, which is electric fuel mechanism or hydrogen fuel mechanism, is also coming into place. So in my viewpoint, I think the demand for R&D will increase from auto sector, from aviation sector, from healthcare sector, and also from entertainment sector. So all in all put together, I think some of these companies which I earlier mentioned, they look interesting from investment perspective, and they can be built added into the portfolio of the customers.
All right. Devan bhai, even at this rate, the kind of sectors and stocks that you're telling us, 5 crore rupees would be less. But, you know, this is a roaring bull market and one understands the kind of problems of plenty that equity strategists such as you face these days. And before we let you go, Devan bhai, a very sad development which the markets woke up to today morning was the passing on of Mr. Charlie Munger into the heavens. As I have mentioned, that one of the finest brokerages over the last 7-8 decades that have created supernormal wealth, not only for clients but also for themselves, has been the House of Choksies. Few things that you may have recollected from Mr. Munger's experience. What have you learnt? What were the 2 or 3 best things about him?
So while we definitely feel sad about passing away of Charlie Munger, but at the same time, I would say that I think one who betted at the age 99, I think no regrets, first and foremost. Second thing, what a lucky generation we are. We got the opportunity to learn from people like Charlie Munger, people like Warren Buffett. I think what kind of ethical principles that they have taught us in the era of investments. I think something which is very, very profound, which is very clearly spelled out, that if you are not reading, then I think you are not wise. What a statement it is. I guess I think for wise to be wise, I think you need to be a continuous reader. That is a perfect, I think, understanding that we have done. Second most understanding that we have learned, I think, is that you don't have to be intelligent, but I think you should not be you should not be, I think, playing stupid as far as I think your outlook in the market is concerned. The third point, I think, is been communicated by him in very profound way of, I think, communication, that even if you want to wait in the market, you must wait. I think you don't have to chase. I think whenever the time comes and liquidity is available with you, you will definitely, I think, get a good opportunity to invest into. So some of these principles are so very, I would say, I think they have gone into our DNA all these years. I think we have understood this subject after reading them and then practiced it over last 3.5, 4 decades in my personal capacity as well. I find that I think because of this particular understanding which we got from people like Charlie, people like Warren Buffett, I guess I think we are so rich today in taking our decisions, in making our journey successful into stock market. So frankly, I think we should be thanking them and can't thank them enough either, I would say. But at least we can pray that God gives him, I think, a rest and I think give a lot of peace to him and bring, I think, such kind of values onto the surface for many of us to follow in course of time.
Okay. For those who've just entered the markets or are less than a decade old, I'd just like to point out Devan Bhai's uncle, Shri Kishan Lal Choksi, is the equivalent of Charlie Munger and Warren Buffett put together. At a ripe old age of 90, you can hear his crystal clear voice during con calls, and he's the first with his pen and copy noting down a lot of important events when it comes to physical gatherings of blue chip companies. Devan Bhai, in your portfolio, in the family wealth portfolio, is there anything that resembles what Charlie Munger or Warren Buffett would have preferred and you would have kept for decades?
We do keep, I think, lots of these companies, I think, for last few decades. In fact, I think since last 4 or 5 decades, I think I'm seeing some of the companies continuing in my portfolio. And I'm seeing those companies compounding at the rate of 29 to 30% over last 30 years. So frankly, I think since we understood this subject so well, I would consider myself that I think we are lucky enough to understand this subject. Our education definitely helped. Our value system definitely helped. But at the same time, I think this kind of learning, which we picked up from the experience individuals, has definitely helped us in creating the wealth in the portfolio of ours as well as our client. And 30% CAGR return shell, I think, is something which we have been able to accomplish so far. I guess I think it's something which has come largely because of these influences, largely because of this kind of understanding of the subject. No rocket science. I would consider myself as a very average person, keep learning myself on a daily basis, and at the same time try and practice some of the better quality ideas on an ongoing basis. I'm not, I think, claiming myself to be very intelligent, but I'm trying to keep myself, I think, level-headed in every situation in this market.
Okay. Devan sir, I just wanted to ask you one last question, and that's on the entire IPO frenzy, the new listing space that we've been witnessing. What a remarkable listing from IREDA. 60 rupees is what we are seeing. It's near doubler on day one. And you know, an 87% premium from the issue price is what we can see here. Your own sense of out of the 3 or 4 new listings coming in tomorrow and day after, what are your expectations with the kind of listings that we can see?
The appetite, I think, has increased significantly for most of the investors. On one side, you have got asset management companies under mutual fund who are attracting around 16,000-17,000 crore worth of monthly SIP. On other side, you are having insurance companies which are investing for long term, and their new business premium growth is anywhere between 18 to 22%. So they are attracting pool of money. You have the provident fund companies who are attracting pool of money, and 15% of the provident fund companies' portfolio is also being invested into the market. So when you see this kind of money coming into the market from individuals, and when at 27-30% kind of a ratio to GDP, if that money flows into savings and investment and it gets deployed through this kind of investment instruments like provident fund, insurance fund, or asset management companies. In my viewpoint, I think this particular subject, I think, has to be understood fully, that this money can actually, means this money will actually go into investing into some of the newer ideas which we are talking about. India is, I think, one company which looks, I think, brilliant from the point of view of future prospects on the lending side, and the renewable is a sector which they have chosen. Uh, Likewise, Tata Technologies or Gandhar Oil, which is getting listed also. I believe that I think both these companies are equally having a very strong business model. So let's see how exactly the journey unfolds. But my reading says that investors' portfolio has a stronger appetite. That is why they are possibly buying these companies even at a premium post listing.
All right, fair enough. Thank you so much, Mr. Choksi, then for being with us and sharing all these valuable insights with all our viewers. It's always a pleasure to have you with us on Business Today Television. Hope you have a great day, and we will have you soon back again on Business Today TV. What we'll do right now is take a very, very quick break right now, and when we return, a lot of other stock market discussions will continue with our other technical guest who will be joining us right after the break.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Business Today Television and this is Market Today. I'm Sakshi and with me is Shailendra Bhatnagar, and also now joining us is a special guest. Soni Patnaik now joins in, AVP Derivatives Research at JM Financial. We're discussing the stock markets. Historic day, $4 trillion mark has been achieved on the BSE listed stocks. Soni, great to have you with us. It's almost a double century like Shell was pointing out on the Nifty, 20,087. What would you do on the Nifty and the Nifty Bank now?
Right, of course. Thank you so much for having me on the show and good afternoon to all the viewers. So if you look at Nifty, of course, it was very clear the moment it crossed 19,875, which was its resistance, it was heading towards 20,000 mark. And now that it is already above 20,000, it is very important to know where will it go from current levels. So from immediate basis, it seems like, its previous highs of 20,200, 20,250 is an immediate target, which Nifty should be testing shortly. So likewise, it has also seen very aggressive put writing taking place at 19,800, 19,900, even to some extent 20,000 also is expected to be, continuing as a base. So as long as 19,900 is holding on a positional level, positional basis, Nifty definitely will head towards 20,250 mark. Try to break that, it will be seen, of course, if it's able to go into an all-time new highs or not. So I think it is very much likely possible that it will test new time highs perhaps in December series. And similar lines, if we talk about Bank Nifty also is heading towards its 45,000 mark. Although Bank Nifty has a lot of time to go and test its all-time new high, so I think we'll have to have some patience and wait for Bank Nifty to come to those levels. Currently, I think it's quite clear that Nifty is holding out with a far better structure when it comes to testing 20,250 plus levels. And if anybody wants to trade from current levels, I think 9,900 should act as a very strong support to go ahead for those targets.
Okay, this is how the structure is for the Nifty and the Nifty Bank. Soni, according to you, what are the two stocks that will outperform markets on technical charts on the long or the short side? What looks good to you?
So there aren't a lot of short picks right now. I think we would like to stick to long ideas, considering that Nifty is also looking good. The first would be from the chemical space. We've seen a lot of fertilizers and chemical stocks today seeing that traction, especially when it comes to Aarti Industries, Tata Chemicals. Even speaking from derivatives point of view, we've noticed that good rollovers are taking place in chemicals, which is happening perhaps after a month or 2 month of gap. So the pick from this space is Chambal Fertilizers. It has given you that breakout. The last time we saw that 320 was a level where it could not cross, and today it has tested and crossed 320. However, it is closing and hovering around 320. It's a presumption that it's coming. It is entering that breakout phase now. So Chambal Fertilizers is a buy from current levels, keeping a stop loss of 312 and targets of 340 from current level. The second pick would be Indigo. So Indigo, the entire day, it broke above its resistance of 2660. And the past 4 hours, it has not gone below 2680. Although it is quite muted as of now, it has not performed even when Nifty is showing you that highs. It will most likely give you that momentum play, most likely in a day or two's time. So look to buy Indigo from current levels, keep a stop loss of 2650 and targets of 2760, 2780. Sorry, 2760, 2780 the high side.
Okay. Sony, let me draw your attention to two stocks that are doing very well in the FnO space. One is again from the PSU space, which has been buzzing off late. BHEL is now the top gainer in the FnO's action, 6.3% higher in trade at 165.7. How would you trade this stock now? It's at a day's high level. The second stock would be Muthoot Finance, but both of these stocks, first you talk about BHEL and then we can discuss Muthoot.
Right. So first, actually looking at BHEL, it is a no-brainer say that it is heading towards 170, which ideally was the earlier target. So anybody who's holding on to this stock from a lower level, it is advisable that you place or you trail your stop losses somewhere around 158 at max. For fresh traders who wish to enter, 158 should be your stop loss from current levels, and the higher side target will be 170. So I think 170 is very much on the cards looking at the technicals for BHEL. So I think it's quite good. It is even adding more aggressive long beta positions, even though it's a third day that we're seeing the stock running up and giving you a good momentum. And speaking of the second stock, Muthoot Finance is a definitely good buy, I think. But yesterday was its breakout. If somebody had to preempt that breakout level, it was certainly yesterday. And since yesterday to all of our JM clients. And today was a day we've actually booked profits. So if I have to give you a view from current levels, 1380 is that stop loss where one must place this trailing stop losses or fresh stop loss. And from current level, I think it is still looking quite good. It has a lot of space left to it. So 1450, 1460 is that target, which is looking quite easily achievable in the next few trading sessions.
Okay, Ji. Let's do a market check. At the moment, Nifty Bank is at its day's high and it's seriously got back its mojo. 700 points up, 44,571 in front of you. The other interesting point is that on the Nifty, ladies and gentlemen, you have a double century, 208, 209 points higher, 20,100 for you. So as I had mentioned right early in the morning, before markets opened, you will see 20,000. You will also need to tighten your seat belts, and you will also see a record high coming fairly soon as far as markets are concerned. Now, what is driving this rally? HDFC Bank days high, 1558 in front of you. Let's just take a look at how index heavyweights are performing. The reason is that given the strength in the market, you will see pent-up demand coming tomorrow morning as well. Infosys, ladies and gentlemen, 1.2% higher, 1460. HDFC Bank, when was the last time you saw a 2% uptick on HDFC Bank? 1560 for you. TCS, 1.2% higher, 3512. And hold your breath. Sakshi's been talking a lot about Tata Motors. 2.2% higher, fresh record high, 712. Remember, this is the biggest beneficiary of the Tata Technologies IPO as the selling parent of Tata Technologies. Axis Bank, hold your breath again, 4% higher, 1063. There is a rally across the board, and what's really interesting is I want to find out what's the advanced decline ratio on the Nifty. It's 4:1, 40 stocks in the green, 10 in the red. To you, Sony, what are the charts of Axis Bank telling you? Is a fresh record high on the way, 1061, 4% higher?
Right. So, Shailendra, if I have to look at into all the private bank sector, of course, they've not been the best performance in the past few days. Leading HDFC Bank, it has been leading Bank Nifty entirely today. In fact, 1560 was its earlier resistance. HDFC Bank is coming to that fresh breakout levels. Supporting this, we've also got Axis Bank, Kotak Bank, which are looking to looking to contribute to that momentum for Bank Nifty. Axis Bank, particularly, I think 1040, 1045 was its resistance congestion area. It has easily and comfortably crossed that. So, it's closing above it. So, there's no reason why it should show you any signs of exhaustion just with today's day of rally. Perhaps, from current levels also, I think 1080 to 1090 looks quite feasible in the next few trading sessions. So, look for those targets. I think it's going to support Bank Nifty. It's going to support the other heavyweights into leading the index up to 45,000. So, Axis Bank will definitely not be shy away from lending its support. So 1080, 1090 is the immediate target for the next 2 to 3 trading sessions. On the downside, 1045 should be your stop loss from current levels if anybody has to enter from these levels as well.
Okay, the mid cap index is at record high levels, 42,620. A lot of sectors also hitting record levels. Nifty Energy also at record highs as well. You can see a sharp momentum, and a lot of stocks from the mid cap basket are now moving higher in trade. So let's focus a little bit on the mid cap stocks as well. Sony, could you tell us your views on some of the stocks from the mid-cap basket that are now in focus? Let me throw a few names to you which are doing very well. How would you look at from the energy basket? Like I was saying, BHEL we've already discussed. What about Torrent Power? 11.8% higher. It's the top mover on the Nifty Mid-Cap 100 index. Would you look at this stock?
Definitely, Sakshi. I think although when I look at the charts, the breakout was there right from morning. So from 8 was at level, so I think it's already done its part for the day. It could be a very good positional play if you get any sort of dip anywhere around 920, 910 odd levels. I think that would be a very ideal scenario for traders to enter fresh, because then only you can have a very favorable risk reward ratio. You can perhaps place your stop losses where you saw the fresh breakouts coming today, which is 860. So I think place your stop losses at 860, just in case anybody's already holding or anybody's already bought this stock prior to today's rally. Then it's advisable to trail your stop losses to 860. I think it's as long as it's going to hold on to that important crucial level, you may again see it bouncing back to 1020 odd levels. So I think it's a very fair play. You get that dip, you enter, you maintain your stop losses with discipline, and the moment you see your targets coming up, you book out.
Okay, what about Aarti Industries? You were talking about the entire chemical play. Would you look at Aarti Industries? It's now up by almost 6 odd percent right now, and we've actually seen a momentum build up in the last few months as well, and it's now at 6-month highs as well. 22% of a surge was seen just in the last 1 month. Would you look at Aarti Industries at this level?
Certainly, Sakshi, I think Aarti industry is already adding up very aggressive long built-up positions, 17 odd percent up until now. And important to note is that tomorrow being expiry and somebody still building such heavy positions, it will only convert them, convert into rolling over the positions from current series to next series, which would be on the longer side. So the moment you see stocks building such good long rollovers, these momentum continues for another week or so. So Aarti likewise is expected to continue with that momentum. I can also see there's very good volume action. there's complete a good breakout on charts as well. So on immediate basis, I think for this series, 570, 575 is something that we can see it coming maybe by tomorrow, by Friday or something. The
Sure.
moment it's able to cross above this level, it will enter into a completely different trajectory. So on a positional basis, it will rally up to 630 odd levels. That can happen in the next 10 to 15 odd days.
Okay, fair enough. Sony, stay with us. We'll take a very, very short break right now. 10 minutes to go, and the Nifty is now above 20,100. We'll continue to look at stocks and tell you where Sony is positive on and where can you still take positions. Be with us on Business Today.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Business Today television and this is Market Today. I'm Sakshi and with me is Shailendra Bhatnagar. Also with us is our guest Sony Patnaik, who's telling us what trades to take. 9 minutes to go for the markets to shut shop. Any BTST, STBT calls that you'd like to highlight, Sony?
Yes, definitely. I think we'll go with the mid-cap sectors and mid-cap space more. So it will be from the technology IT pack. I think, you can look at LTIM. It's looking quite robust from current levels on charts, especially. And it's most likely to break the resistance of 5,600, 5,610 in spot levels. It can only do it via gap up. So, you can buy LTIM from current levels. Keep a very small stop loss of 55 for 55, 50, 55, 40 should do the trick. So maintain your stop loss at burst in case, 55, 40 should be better. Once it's broken its resistance of 5610, you'll look forward to, seeing the targets coming up to 5700 plus.
Okay, ladies and gentlemen, we are now at 3:22. Time for a quick wrap on the markets. It's really difficult to convince a broker to let you take trades beyond 320. Let's look at how the day has panned out, and it has been a fantastic outing for the Nifty. 200 points, a double century on the Nifty, a day before the FnO monthly expiry on November 30th, Thursday. Remember, it's been a fabulous month for the Nifty, up about, let me give you the exact number, it's definitely up about 5.7%, but let me just give you the right number when it comes to the monthly gain on the Nifty. Yes, 6%, ladies and gentlemen. As far as futures, 6.1% as far as futures are concerned in this month. Mid-cap Nifty up 11% in the month of November. Bank Nifty up 5% and Fin Nifty up 6.4%. Are these signs of topping out? Are these signs where you'll see profit booking happening because you have round numbers of 45,000, 44,500 on the Bank Nifty, 20,000 on the Nifty? Only time will tell, but it has been a fantastic momentum when it comes to gainers today. Very strong moves. You'll be surprised to see the kind of double-digit gains that I am seeing on Nifty stocks for the month of November. Hero Motors up 20%, Bajaj Auto up 15%, Axis Bank up 8.5%, HDFC Life up 11%. These are monthly gains I'm talking about. Titan 10% higher, NTPC 11.8% higher. There are at least 20 stocks that have reported gains above 8% on the Nifty in the month of November, and possibly this is a breakout rally which we will remember for the months to come, although there will be some sideways movements. Let's see what the results offer as far as elections are concerned, but a fabulous move in the making. To you, Sony, what is BHEL saying on the charts? 166 in front of me.
Right, Shell. So I think we just discussed it. So 166 is already there, and 170 is not very far from current levels. I think hold on to 170. We should definitely see those levels most likely in a day or two's time. And keep on trailing your stop losses above your cost. I think 158 was a level when I mentioned 10 minutes ago. 158 remains even now as a crucial support. So I think trail your stop losses to 158 and keep holding for targets of 170.
Okay, let's wrap up the best trade for today. That is IRDA, a fabulous listing, and even from those levels at around 50, the counters jumped another 20%. Let's look at the volume that IRDA has clocked. Of course, it's locked at circuit, and at the moment you see IRDA at, in terms of volume, just a moment please. There's so many things as far as prices are concerned, and they are open on my screen. I'll just tell you the price. Of course, it's at 60. Okay, it's an 87.5% rise as far as the IPO is concerned, and in terms of volume, just let me arrange a snap quote for you and show you how much of volume has come in. Yes, okay, 3,181 crore shares, rupees as far as trade is concerned, and still there is a locked circuit of 1 crore shares. It basically means that tomorrow you'll see this pent up demand getting soaked in from 9:15 a.m. Let's see what happens, but this is how the structure is. A fantastic listing today, and perhaps the big daddy of them all is getting ready for tomorrow. Tata Technologies, remember, it was a blowout kind of a response, the maximum that we've seen ever, and huge oversubscription for an IPO that has come from the Tata stable after a gap of nearly 17-18 years. Sakshi, to you. Okay, let's look at the market again and do a smart check on what are the kind of stocks that have moved. I'd like to point out, as always, the record highs in the market that tell you where the momentum is coming in from and where you'll see more money moving in. Okay, let's look at the most obvious ones. Bombay Stock Exchange, fresh record high in front of you. You've seen very strong moves coming in on CDSL. This is something Sakshi checked, 912 in front of you, 5.5% higher. Let's look at low ticket sizes. NTPC 258.15, a fresh record high in front of you. Remember, this stock broke out of a 14-year sideways trend and then has moved up. Philips Carbon Black, better known as PCBL, 265, 4% higher. No let up in Power Finance Corporation, 327 in front of you. Valuations getting expensive, 2% higher, 1.32 crore shares traded. Minda Corp Fortis, these are stocks at 371.70, up 11% on Minda Corp. Fantastic rally happening here. Hospital chain Fortis, 378, 1.2% higher. In terms of percentage gains and record highs, Aster DM. This is a transaction that's happened in the Gulf markets where a particular unit of this hospital chain has been sold and the company will get in inflows which are substantial. The news is that there is some kind of dividend which will be announced for this special event. 394.95, 18% higher. Torrent Power 11% higher, 936.90, and of course the other names that we've discussed. Axis Bank 1060, 3.5% higher. Tata Motors 711,445. These are the counters that are running extremely in strong record high territories. The markets are about to close and we'll see a day's high on the Nifty. That basically means that pent-up demand will now also work its wonders on the last trading day of what has been fabulous FnO expiry for November. 208.85 up 20,095 for Nifty cash, and a 700-point rally on the bank Nifty, 44,600. A fresh record high on Nifty 500, 17,900, 161 points higher, and a blowout day on Nifty IT index, 1.5% higher, 483, 32,600. This is how the markets are, ladies and gentlemen. The first thing that a bull market rises on is liquidity, which is coming in literally tons, and the second thing that a bull market rises on is the lack of supply. So if you're sitting on these stocks that are hitting record highs, if you're sitting on these stocks which are moving 10, 11, 12, 13% higher, it's best not to exit. Just hold on, and there just might be interesting days ahead. With that, ladies and gentlemen, we'll draw to a close on market today. Do join us tomorrow morning on what is probably the best place to be when it comes to tracking live markets. Thank you from my behalf and from the side of my team. Do stick on to business today.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.